The RBA has said it will not increase interest rates until 2024, but there might be a few buts here. And helping to answer this question is Peter Switzer, founder of the Switzer Report. Pete, so interesting commentary in the AFR I read this morning, and a few analysts such as yourself I've spoken to over the weekend believe that there could be as many as 5 interest rates, out-of-cycle interest rates rises by the banks over the course of the next year. Are you buying into that?
Yeah, I'm not buying into 5, Pete. That's real guesswork. But I tell you what, I certainly believe by the end of this year, 2022, the banks will be doing out-of-cycle increases.
Yeah. Because so how many? How many is the question?
I would probably gamble 2 or 3 across 2022. 2023 will be the year where they really start to rise. And, you've got someone like Chris Joy, who's a pretty good predictor, thinking that after that, we'll see house prices fall. And he's going as much as 20%. So, look, I think the bottom line is this. You have to look, and your story earlier, this whole bulletin is about euphoria, from flying overseas and whatever, the spending boom that's going to come. If Bill Evans was right, and I mentioned to you just last week, if 7% boom comes, interest rates have to rise, and the Reserve Bank is being put under pressure, not only from economists, but the bond market to back away from the 2024 call on the cash rate. That's the cash rate. Yeah. Banks can rise without the cash rate going.
Do you think they'll do that, Pete?
Banks? Yep.
No. Do you think the RBA will back away from that 2024 target?
Yeah, I think that there's RBA minutes coming out this week, and that statement I think will show that they're a bit surprised that the growth is coming down the pike, and that means that they'll have some words that say, don't believe the 2024 pledge / promise / undertaking we've got out there. It may well be earlier, and it should be. If we're booming, there's no point keeping it down there.
So what's that going to mean for people who've overindulged when it comes to their mortgage, Pete, and you've got those several rises?
Yeah, I think people should really, and this is not financial advice, Pick, so I don't know the circumstances, but certainly fixed rates are still very good. I had a quick look this morning, got 3-year fixed rates out there for about 2% on a comparison rate basis. That's very good. I didn't check the 4-year rates, but remember this, if Joy's right and house prices start falling by 20%, then you'll see the end of interest rate rises, and therefore, locking in for too long might not be a great idea. But probably 3 years probably makes a lot of sense, because I've got 2022, 2023, then they start, they're rising across those years. Then maybe 2024, there could be a real slowdown impact from that.
Okay. Peter Switzer, good to chat as always. Interesting times ahead. We'll talk to you soon.